Today I'll show you how to check a stock before you invest your money. And we'll use Adobe stock as an example. There are 4 things we always need to consider and analyze in detail before we invest our money. First one is company fundamentals. Second one is valuation. Third one is market and industry outlook. And fourth one is technical analysis and timing. So now let's go step by step. First, let's look at the company fundamentals. This simply means, is a company strong and healthy? Let's look at Adobe. Adobe makes popular software like Photoshop and Illustrator. And it's very important to understand what they sell and how they make money. If you look at Adobe, you can see that their revenue has been growing steadily. Growing sales means more customers are buying and companies making more money. And it's also important to understand whether the company is making profits and how much profits they are making. Profit is the money left after paying costs. If profits are strong, then it means the business is efficient. If you look at Adobe, you can see that their profits are high. Also, it is important to check the debt of the company. Least debt means least risky if the economy slows down. If you look at Adobe, you can see their debt is not very big. So, fundamentals tell us if the company is safe and reliable. Second, we need to check the valuation. This means, is the stock price fair or is it too expensive? One easy tool to check is the price-earning ratio. For Adobe, for example, the price-earning ratio is about 40. This means investors pay $40 for every $1 of profit Adobe makes. A high number usually means people expect big growth, but it also means you are paying more. So, valuation is like shopping. You don't just want to buy a strong product, but you also want a fair price. Third, we check the market and industry outlook, the big picture. This means, is the industry growing or shrinking? For Adobe, for example, they are in the digital creativity and cloud software industry. This industry is growing because more people work online and create digital content. But there is competition, like from Canva. But still, Adobe has a strong brand and loyal customers. So we need to understand, even if the company is good, we must check if the whole industry is moving forward. A strong industry helps the stock grow faster. And finally, we also need to check the technical analysis. This means, what's the best time to buy the stock? For this, we need to check the stock chart. We need to understand whether the price moving up or down. This shows the trend. We need to understand the support levels for the stock. Support levels are the prices where the stock often stops falling and bounces up. And we also need to understand the resistance levels for the stock. Resistance levels are the prices where the stock often stops rising. So technical analysis doesn't tell us if the company is good or bad. It only helps us to choose a better entry point, so we don't buy at the most expensive moment. So remember these 4 simple steps before investing in any stock. First one is fundamentals. Is the company healthy? Second one is valuation. Is the price fair? Third one is market outlook. Is the industry growing? And the fourth one is technical analysis. Is this the right time to buy? And if you follow these steps, you will make smarter choices with your money. We used Adobe today, but you can do the same check for any company. And thank you for watching. If you like this video, please subscribe and let me know which stock I should explain in detail in the next video.